Thank you for inviting me to discuss our work on the Federal Home Loan Bank system. The FHL banks support liquidity in the financial system and promote housing and community development. The failures of Silicon Valley Bank and Signature Bank in March 2023 renewed questions about the system providing liquidity during a crisis. Today, I will discuss the system's role in providing advances, use of advances during March 2023, and issues revealed by the bank failures. First, FHL bank advances have been a steady source of funding for members. Banks primarily fund their operations through customer deposits like checking and savings accounts. Advances from FHL banks offer members another low-cost source of funding to make mortgages or manage liquidity risk. Most U.S. banks were active FHL bank members. They regularly borrowed consistent amounts between 2015 and 2025. On average, 3/4 of active members had borrowing that was around 5% of their total assets. Changes in borrowing across quarters was small, even during periods of stress. Our economic modeling found that higher borrowing was generally associated with positive policy and financial outcomes, especially for smaller banks. For these banks, higher borrowing meant more lending, including real estate lending, and lower likelihood of failure. FHL banks should regularly evaluate members' creditworthiness, considering collateral pledged to secure the loans and members' financial condition. They assign a credit limit and require advances to be fully collateralized. They generally lend the amount requested if it is within the member's limit, but they can deny a request based on a member's financial condition or supervisory information from a regulator. Now we'll turn to the March 2023 bank failures. Several banks experienced stress in March 2023. Total outstanding FHL bank borrowing increased substantially at the onset of this period, exceeding amounts during previous financial market disruptions. 97% of this increase, as well as much of the borrowing during our study period, was driven by a small number of large banks. Bank executives we interviewed told us they increased their use of advances at this time due to economic uncertainty, pressure to secure funding, and to maintain customer confidence. At the beginning of 2023, SVB and Signature Bank were among their respective FHL banks' largest borrowers. They were not deemed to be significant credit risks until March. At that point, the relative FHL banks continued to provide advances to both banks, increased the frequency of their communication with the bank's regulators, and began to take steps to limit their exposure. The last point I'd like to make is the importance of ongoing FHL bank coordination efforts. Timely coordination is critical when a bank is at risk. The relevant FHL banks made several efforts to help the failing banks pledge collateral to obtain liquidity from the Federal Reserve's discount window. However, these efforts revealed some coordination challenges between the systems. Since then, the two systems have begun efforts to address operational challenges and improve coordination. Engagement between the systems has increased through tabletop exercises to test collateral reallocation. In addition, a working group was established to develop standard procedures and an emergency playbook. GAO's work has also found that more timely escalation of supervisory actions by bank regulators is needed. Regulators identified liquidity and risk management concerns at both failed banks years before 2023. These were key drivers of the bank's failures. However, the banks were slow to mitigate the problems, and regulators did not escalate supervisory actions in time to prevent the failures. We have several recommendations to regulators about addressing the risks of untimely escalation. Continued commitment to coordination and timely escalation are important to help ensure that the system is prepared to respond quickly in a future crisis. This concludes my statement. I'm happy to answer any questions.